Good afternoon, good evening, everybody. Welcome to the webinar. It's a pleasure to have you here, and it's good to be back. Jake's okay. He's actually wrestling with an illness right now. He's a little under the weather. He may be back in time for next week, but for sure we'll be back the week after that. So we're going to swap back and forth every now and then, if that's okay. We try to bring you experienced traders who are using the software to share their experiences with you. And I like to walk down the stairs from Mount Olympus to let you know what's going on from a developmental standpoint and let you guys talk to the owners of the company and hear how we're using the software and how we've developed this tool for people like yourself and Jacob to use it. So he will be back. And we'll continue to try to bring more people who've used the software or using the software profitably in front of you for demonstration and questions and answers. Welcome. So one of the things that I always like to highlight about our tools, we've been in business now for 13 years, this past May, going on 14 years, which is rare for a company in this space. Most of the people are pop-up marketing operations that do a quick email blast, send out a offer for a piece of garbage that doesn't really work, and they disappear. We've been around here, based out of North Carolina now, for over a decade. We have a Trustpilot rating of 4.9 out of 5 with over 3,000 customers in every major market of the world. Our tools are used to trade futures, forex, equities, options, as well as cryptocurrencies, now the latest game in town, and we'll talk a little more about those markets in a moment. We are the only company. What do you do that's different? We are the only company, to the best of my knowledge and abilities, that gives people who are curious about our company and its methods the times and directions for the most popular markets 2 days before the webinar. We'll show you where that outlet was. If you've been following along from home, you've already seen for yourself what's happened. We let you know the system we're going to apply to those times and directions when they arrive. Now, this is for those of you that don't have an existing trading system. You want to do something very simple and easy and not necessarily apply anything else you've ever learned before. And then 2 days later, which is today, welcome, we add up the results. We look at what happened and determine for ourselves, did this work or did it not work? What happened with those times? And so it's a very rare proposition that we're offering here. It's based on this idea that there are times in the future and directions in accordance with those times where big moves are likely to occur. And our first basic human instinct is to believe that that's not possible. It's not true. There's no way to know what's going to happen in the future. Our perspective as engineers, myself and my partner are engineers before anything else, before gurus or marketers. We look at the world in terms of data. What does the data tell us? And if the data is too big to parse and understand on our own, we apply electronic solutions to it, right? But we know that in every subset of data, there are patterns, and we try to look for those patterns, even if we don't understand what the data is trying to communicate to us. And so our minds aren't hardwired to look at these little black and white squares and larger black and white squares and understand what they mean. We don't know how to parse the patterns. But when we apply the right tool, a tool who's been built for the sole purpose of decoding that information, decoding those patterns, we're able to see it. So our software is really a smartphone camera for historical market data. And we find patterns that I personally believe large institutions and investment banks don't want you to see. They don't want you to know there's a wizard behind the curtain. But more about that in a moment. When you look at a chart, when I used to look at a chart, I used to have to apply lagging indicators to them because I didn't see the patterns in the historical data. I just saw what appeared to me in my novice brain as waves and structural moves and highs and lows and double tops and lions and tigers and bears, oh my. But the code we developed afterwards searched for patterns like Columbo of old or Jack Reacher of new, someone who asks questions. How does this really work? And when the program looked at the historical patterns, it began to notice a prevalence of repetition, times that were producing directional movements consistently, maybe not 100% of the time, but consistent enough that we noticed them. And when you begin to see those patterns, you begin to understand this concept of random markets is nuts. How many of you turn on the TV at night and some talking puppet head tries to explain to you very simply why the Dow fell 800 points or went up 800 points? It used to be the debt crisis in Greece. Remember that? It used to be this or that, and it was this country or that country. It was inflation here or there. Somebody in some office somewhere released a report that said something about this, that, or the other thing. Now it's Ukraine and the railroad crisis, and Joe Biden's grandmother's great-grandchild on her father's side said boo, boo, boo about the inflation report. And these are the reasons we're given. I don't believe in any of that. If you're around long enough, you begin to realize that there's something more nefarious happening. There's something more complicated going on. And so we built a tool based on the opposite presupposition. We don't believe the markets are random. I believe that there are hands in the heinies of the puppet masters of the world, moving their fingers and making the stocks and index you're watching go up and down. I believe there's a plan days, weeks, months in advance to drive prices higher and lower, to create panic at stop runs above and below, to create liquidity. I believe the people that are consistently making money in this sphere, the Jamie Dimons, the Berkshire Hathaways, the Goldman Sachs, always get caught with their fingers in the proverbial financial cookie jar. Now, what I believe is irrelevant. What can I prove is on trial today. So again, we gave out the times on Tuesday for Wednesday and Thursday in popular markets like the E-mini S&P, gold futures, the Dow, the euro currency, oil futures, the E-mini NASDAQ. We gave them out for Wednesday and Thursday. Well, how does this work? Where does this information come from? What does it mean? Well, I'm glad you asked. You see, when people cheat, they can't do it every day, every moment of the day, all the time. And what the software is doing is essentially looking at a virtual calendar. If we subdivide that calendar into individual weeks and days, and here I'm assuming a 5-day trading week, Monday, Tuesday, Wednesday, Thursday, Friday. Imagine we're trading on a Friday, which is tomorrow, right? I can ask the computer, hey, over the last 3 or 4 days, have there been any times where the E-mini S&P has been moving up consistently? So imagine with me with a ridiculous hypothetical that on Monday, the ES went up at 938. It went up at 938 on Tuesday, up at 938 on Wednesday, and up at 938 on Thursday. Imagine that a very simple line of computer code discovered this behavior pattern. Ding! Any reasonable person would presume the possibility of a repetition of that pattern tomorrow at 9:38. We could, using the principles of risk and reward, determine how much am I willing to risk in the market tomorrow to see if it goes up 20 ticks, $20 at that time. Does everyone understand the premise of the principle? The software is looking for evidence of institutional shenanigans. You and I can't push the market up or down at these times. Our accounts aren't large enough. The size of our accounts precludes the possibility of us teaming together and forcing this. It has to be someone with supreme liquidity. And so when I gave out the forecasts on Tuesday for today, which is Thursday, that's exactly what the software had done. It presupposed that someone had their fingers on the scale. And all of these times were times that the program had uncovered something. The only reason these blue lines and times are here is because in the recent past, for whatever reason, we believe malfeasance and manipulation are the reasons, but for whatever reason, the markets have been more consistently than not driven down at 745, 945, 1130, 135, 240, and 425. Okay? Conversely, for whatever reason, we believe because banks cheat, these were the times lately in the recent past that shenanigans have developed a recurrence of buying pressure. For one reason or another, fireworks are going off at these times and pushing prices higher. Now, Jerome, is that to presume there is a 100% guarantee that all of these times will produce those moves in the future? What do you think? Tim, Rick, Michael, is there any guarantee that these times are going to produce that move tomorrow or the next day? Is there any behavior pattern in your personal life, in the life of your coworkers or spouse or family members that is 100% consistent? No. Unless you have obscene amounts of OCD. If you're the kind of person that has to turn the lock 5 times before you leave your house. Most of us kind of do the same things every day. You eat in the same restaurants, you order the same food, you love the same desserts, and you've probably watched your favorite movie when you've swung through it midway on TV over and over again. But for whatever reason, this is a rough map of what the banks have been doing lately. Selling on the top and buying on the bottom. If you believe markets are random and the only way to negotiate a profitable existence is by studying for 10 years in your Himalayan cave with your high-paid guru, eating bat guano and journaling and putting together a very specific consortium of lagging indicators with super secret settings, then turn the webinar off right now. If you're watching a recording from home, just close it out, flip on the TV. There's a good episode of Magnum PI on some retro station somewhere. None of what I'm about to show you will absorb at all. You won't believe it. About 90% of people who hear what I teach and see what I show them demonstrate what you're about to see actually believe it. In a few moments, I will, virtually speaking, walk on water, reach down, turn the water into wine, and it won't matter to most of you because you don't believe the world is this way. You believe in puppy dogs and unicorns and skittle rainbows. The world is a much darker place. Let's get rid of my squiggly lines and go a little deeper. What we need to make a distinction between is the raw information that I've just shown you and a specific trade rule. So for example, I'm not telling everyone here you need to buy and sell at each of these times. That's not what the information is implying. I'm not promoting that. I'm telling you that these times, for whatever reason, have been producing those moves. What we do teach, though, is a specific setup, and I'm going to tell you about that here in a moment. What I mean by the signal looks a little like this. If we look at Ethereum, the times that I developed for you and published a few days ago were buy, sell, buy, sell, buy, sell, just like what you've seen me demonstrate with the ES. In fact, if I pull open the time map for Ethereum, a very popular and volatile cryptocurrency right now, this was what was forecast. And by forecast, I'm describing what we've covered already. An analysis of Ethereum recently shows, for whatever reason, prices were consistently, more often than not 100% of the time, falling at the blue line times and rising at the white line times. So guys, when I discuss signals versus setup, what I'm trying to determine is whether or not these times produced anything recognizable after the fact. So when I take my cursor here and I draw arrows at 9:45, I'm saying that that signal was expected to potentially produce a move. And when I come and draw an arrow at 12:25 and 3:15 and 2:35 and 1:35 and see that we're off one bar from the low at 2 o'clock, and that the market dropped and we're off one bar from the high at 7:25, that it dropped down at 5 o'clock, pushed up at 4:35 and down at 4:20 Eastern time, I'm saying that these signals we've been waiting 2 days for did something recognizable, meaning we were waiting for them to generally go up or down at these times, and the signals generally produce those moves 2 days later. As we begin to go backwards in Ethereum, we note that that is a pattern that occurs over and over again. And when we go back and look at yesterday, we see it's going down at the times that it was expected to go down and up at the times it was expected to go up at a lot. There appears to be, the more often that we look at a market like Ethereum or gold or oil, there appear to be movements that occur at these times that are pre-planned. And when we arrive at these times, prices are rising, and we arrive at these times, prices are falling. Not 100%, but man, enough of the time to make us really wonder what's going on. So that's a signal. You can see on my gold chart, for example, the times that we've been watching for 2 days have arrived. And when we get to those times, you can see it rose up at 1250. I'll scrunch up my chart. It came down, gold at 1140. It went down to 1250. It went up to 140 and down to 320. And now it's working its way up to 440. Well, where did those times come from? Where did those directions come from? They came from an email sent out to over 18,000 people. And look, compare it. 140, 140, 1140, 1140, 1250, 1250, 320, 320, 440 is coming up fast in 17 minutes. How is that possible? Those are the signals. But that's not a trading system. Those are signals. Why does this make me nervous? And why should this make you nervous? I'll tell you why. I'm going to share a personal story that I've only told a few people about this. When we were kids, my parents used to drop us off at my grandfather's house. And he was not a good guy. In fact, genetically speaking, he was responsible for a lot of stuff that we had to work out in therapy years later. And when we went to his house, we played Monopoly one day, my brother and I. And I was probably 12 or 13. My brother was 7 or 8 at the time. And I had him dead to rights. I had hotels and houses on Boardwalk and Park Place. And he landed there. And I said, that's it, I got you. And he should have, according to the rules of the game that we were playing with, he should have been out of the game. I should have gotten all of his property, all of his money, and we should have been finished. And instead, this is a true story. Instead, he reached over into the bank and he pulled out hundreds and hundreds of dollars from the bank. And he handed it to me. Now, he didn't win that money with one of the orange or yellow cards. He didn't win that money or cash out any of his houses or hotels to create liquidity. He simply reached back into the bank, pulled out the money, and handed it to me. And I said, Grandpa, what are you doing? And he said, I'm mortgaging my Buick, a car that he kept in his garage, a brand new Buick in pristine condition, leather interior. He used to make my grandmother run alongside the old Ford pickup truck he picked her up from her job in every day. He would open the door and make her run alongside of it. A real amazing human being. And he had a beautiful car that he never drove and kept in this garage. And he said, I'm mortgaging the car. And I realized he was making up the rules. He was making up the rules with a game that we were playing a different set of rules for. If you type JP Morgan Precious Metals, you'll see a wonderful article that comes up. JP Morgan agrees to pay $920 million in connection with schemes to defraud precious metals and US Treasuries markets, using a bunch of techniques, including something called spoofing, making orders appear where there were no orders. Now, gold is probably one of the most precious metals of all. And so imagine my surprise after 13 years, having paid a near $1 billion fine, that somebody, the largest investment bank in the world maybe, somebody is still moving precious metal prices higher and lower at times that you knew about since Tuesday. This is monopoly the way my grandfather plays it. This isn't trading the way you were taught by Joe Schmo at bigticks.com or Nigel Rutherford with the 40-year trading pedigree who lets you come to his house for $10,000 and watch him trade for an hour. That's not the world we live in. This is the world of Norm from Cheers. When asked how he was, said, "It's a dog-eat-dog world, and I'm wearing milk-bone underwear." That's the world we live in. But let's get back to the problem. What do we do if we don't have a trading system? What if you're not following something like a candle pattern or a volume pattern? What if you're not using order flow or moving average crossovers or fib retracements? What if you're starting out and trying to put something together? Well, I'm glad you asked, because in the very email that I sent you with the signals that you got, I gave out a very basic trading system, one that we were going to apply and follow. What is that system exactly? Well, let's come take a look at the page so you know I'm not pulling any shenanigans on you myself. And these are the same signals that Jacob uses and trades successfully for himself in his own accounts. The same crisis of conscience that he had when he was looking at the software for the very first time. And just so you can see on the page that was sent out with the signals you received, we will be showing what? How the signals can be traded. Well, how? By using one of two simple entries. What are the entries? Well, let's zoom out just a little bit. The signal with trend or the puncture trade. And then I link to a video on YouTube discussing the rules. How big will our stops be? 1.5 ATR volatility stop. Well, what the heck does any of that mean? When we started talking to our customers, we began asking them, how are you using the tools? How are you using the tools? And the people who were profitable, nearly 2/3 of them said, Michael, we're trading your signals in the direction of the trend. And if you've been trading more than 2 minutes, you've heard these things whispered and repeated in various forms and pages. The trend is your friend. The trend is your friend. Follow the trend. Well, about 2/3 of our customers were taking these signals or a permutation of them and watching for entries in the direction of the trend. And so when people are making money consistently, you take notice of it. You've discovered by now that most people in these forums and these pages on Facebook and Discus, they don't share what they're doing, or it's very hard to follow. Most of their screens have 14 or 15 indicators with settings that they've finely tuned over the years, and they don't really vocalize how it all works. And if they do, it's sort of like watching a South Korean soap opera without the captions. Well, our customers said, hey, it's simple. We keep it simple. So I want to show you what we said we'd be watching for. The first one is called a signal with trend. We use a 120 period exponential moving average. Is there something magical about the 120 EMA? No, it works well. It's not a 200, it's not a 50, it's somewhere in between. And we started with it 13 years ago, and I didn't change it. Why? Because when you change stuff over time, people accuse you of curve fitting your system. So I've used that value now for 13 years, over 600 webinars. What is the stop? The stop is a dynamic stop. We use the average true range, how big a candle is lately, and we put our stop 1.5 values of the average candle size away. And we're going to exit at the opposite time. So check this out. When the candle closes, we enter at the close of the candle. Now I gave you the times in advance, so this is going to be fun, isn't it? If Goldman or JP Morgan is going to cheat, we know the exact moment to the second the candle is going to close. So slippage and things become less of a concern. You can use limit orders instead of market orders. We count down the candle close like a rocket launch. 3, 2, 1, limit order. Order filled. Done. My stop is 1.5 average true range values away. ATR times 1.5. We want our stop a little more than how big an average candle is lately. So if this candle is 20 ticks, I want to have my stop 30 ticks away. 20 times 1.5. My exit is going to be the next time, the close of the next candle, because I have a window of time. This is how long the market lately goes up, if that move is going to work. We don't know if it will or if it won't. So we have to use some measure of risk. Again, at this time, the candle closes. The risk is 1.5 ATR values away from the low. We exit at the close of the next candle, because that's the window of time that we're watching. The next signal, candle closes, my stop is here, my target is here, because that's the window of time that the price usually rises. Any questions about signals with trend? It's pretty cool, right? Let's continue. There are candles known as crossover candles. If the signal originally starts below the moving average and crosses over, it's now a trend entry. And so for this variation of a signal with trend, just like the video describes, I enter on the close of the candle that crosses over and closes above the moving average. Pretty basic entry. We learn about moving average crossovers early in our career because they work. My stop goes 1 tick under the crossover candle, and now I exit, just like we did before, at the next candle. So a crossover is a variation of a signal with trend. We're following the direction of the 120 period EMA. Very basic system. Now, this one is a little weirder. It's called a puncture trade. And puncture trades are a little obnoxious. But follow me out. When we arrive at 9:30 in this example, my belief based on historical patterns is that price will go down, right? That's what usually happens at 9:30. But guys, the trend is up. So when the trend is up, what am I looking for opportunities to do, Tim? Ray, Mark, what am I looking for opportunities to do if the trend is up? Follow me here on this thought exercise, would you? If the trend is up, what's my job? Find higher probability trend entries. That's right. I want to be buying. But what's usually happening at 9:30, Vic? What's usually happening at 9:30? Selling. Right here at this exact time, when that candle closes, it should be dropping. The software is telling me JP Morgan and the full force of its equity normally comes in here lately and drives prices down. So Fred, imagine my surprise when that candle starts getting higher and higher and higher and higher. Fred, when that candle is getting bigger and bigger and bigger, what are the odds that JP Morgan is selling? Or are the odds that they're going to sell at 9:30 decreasing or increasing? It's getting worse and worse. It's decreasing. So what a puncture trade says is this. It's kind of fun. I put a buy limit order right here on the blue line. Because if it gets through the stop, it means that they're no longer defending this time with shorts, most likely. If it gets all the way to that blue line, so imagine, for example, I'll share a story with you. My wife is, on top of being one of the cleanest people in the world, she's one of the most beautiful women in the world, and I love her. Before my wife goes to bed, if I've left one plate in the sink, or if my son has left one cup in the sink, Fred, she's got to wash it. Now, we all wash things here. I believe in the modern woman. We're partners in life. But she will wash every dish that's left behind. If there's one spoon, it bothers her that sink has something in it. She'll dry the sink out. So if I see her getting ready for bed and I see a spoon in the sink, I know something's wrong. What did your mother say to you? Did the neighbor say something to you? What did the kids do? Is someone failing out of school? What's happening? Something is wrong. So when that stop line gets punctured, the guys that are normally selling then aren't selling. They've abandoned their post. Get it? I put my stop one tick below the candle that punctured the blue line. Now you have two choices here. Choice number one, because it's a counter trend time, 1-to-1 risk reward. If it's 30 ticks here, go for 30 ticks here. 1-to-1 risk reward. Or the simpler way, hold it until the close of the next signal time. So option number 1 is 1-to-1 risk reward. You risk 30 ticks, you go for 30. You risk 5 ticks, you go for 5. Option number 2, you hold it until the next signal. And that's the one that I follow in the video that I've given you and that I've outlined in the instructions. That's a puncture trade. I'm going to take a sip of water. Many of you were conned like I was into believing that a trading system should be 80 to 90% profitable, that it should almost always win like a set of weighted dice in Las Vegas, like a coin that was heavier on one side than the other. Our trading room here at Firefox.com has an 89.65% profitability over the last 14,000 years. Blah, 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 blah. And then you attend the room and you find out, Fred, they're risking $50 to make 2 ticks. And you're like, whoa, who's falling for this? I did. I was in 2 rooms like that about 15 years ago. I fell for it, hook, line, and sinker. I was standing in the middle of the gold rush with a shovel and a gold pan. Tell me where to dig. Right over here, son. It'll be 1995. I'm looking for an edge. I'm looking for an edge. And we're going to see in a second what the edge of the software is. Hint. It's pretty awesome. I'm looking for an edge. Something that makes more money than it loses over time. The trading term is a positive expectancy. I want a model with a positive expectancy. Now, why is this system more preferable than other lagging indicators? Well, it comes back to a study they did of 2 classrooms full of students. 2 classrooms full of students. One, you're going to have 80% of your grade based on a pop quiz, and you'll never know when the quiz is coming. Other group of kids, they tell them the same thing. 80% of your grade is based on a quiz, and you'll know the day before. I'm going to tell you about the quiz the day before. Well, they snookered the kids because they simultaneously told them they were testing for outbreaks of different flus or viruses, and they cotton swabbed their cheeks. And here's what they found out. The kids who knew when the quiz was coming, when they measured for a stress hormone in their saliva, their stress would go up before the quiz and come back down. Go up before the quiz and come back down. This was the stress hormone. You know what happened with the pop quiz kids? Their stress would come up and it wouldn't return to the base level. And then it got higher and it wouldn't return to that level. And then the level hit a max. When you never know when something stressful is coming, you achieve a point that traders know is called analysis paralysis. How many of you have experienced analysis paralysis in your life with trading systems that were lagging and you never knew when the signal was coming? Raise your hands. All of you better raise your hands because it's universal. Fight or flight, reptilian instincts kicked in. I don't know what's going to happen next. What should I do? Should I get in here? That's where the model says to get in. I'm going to get in. Oh, I'm going to wait. I don't know. What should I do? And then it goes straight up to your target and you go, oh, I knew it. And then you see the next signal and you double down and triple down and it hits your stop. And now you leave the room and punch yourself in the face. And shortly afterwards, you blow your account out. This is what happens with lagging indicators. With programs like Warp, you know when the quiz is coming. You know when the quiz is coming. All right. Shut up, Lydick. Okay, cool. Here's that 5-minute ES chart I was telling you about earlier. Now, just so you know, there are no shenanigans at play here. There's a 1.5 ATR stop being deployed on this chart. These are default values, 714.00 with a swing strength of 8. If you have the customer, 714.00, swing strength 8. Same settings I've used for over a decade. And right here, you'll see 1.5 ATR. That's how far away my stops are. 714.00, swing strength 8. What's my moving average? My moving average is a 120 period EMA. That's it. Now, Fred, if I make any money with this, that would be bananas, wouldn't it? So first off, what do we notice? Well, we notice a few things. The market went down at 7:45, it went up at 6:45, it went down at the London Open at 5:55, it went up at the Open at 9:35, and we're 1 bar away from the high at 9:45. It was at 9:50. The low came in at 11:05, and then Fred, look, a high came in at 11:30. We're 1 bar off the low at 12:40. Jim, do you see what happened at 135? Another high, 240, another high, and 225, the market fell down again. We're 1 bar off the low at 2 o'clock. It was at 2:05. The market went up at 5:35, and then we had a so sorry dropped right through the low at 3:05. That one didn't work at all. So 9:45 was kind of a bust. So relative to what we said earlier, can we agree that the signals, the raw information, produced some moves more often than not? 6 times out of 10, the move I was waiting for in the future actually occurred. Well, how do we know it was the future? Again, I gave these times and directions out on Tuesday. All we have to do is look and see. There's the chart. There are the times. 5:35, 5:55, 5:05, 4:25. All of it matches what's here. And you were given those times earlier today, or earlier on Tuesday night. Forgive me, not today. Earlier today, I come through and I give out the times in advance. In this case, in a group of S&P traders, E-mini S&P 500 traders, there are 3,200 members. And I will come and say, look, here are the times for the rest of the day. Some of you are members of this Facebook group. And I'm trying to save as many people as I can and show them what's really happening in these markets. And I give them the times in advance. And you can see this was posted 5 hours ago. September 15th at 11:17 a.m. Eastern. That means all of the signals to the right of this line were things we were waiting for. The move at 11:30 happened with that group. The move at 12:40 happened for that group. The move at 1:35 worked for that group. At 2 o'clock, it was off 1 bar. At 2:40, the move worked for that group. And at 4:25, the move worked for that group. Jim, I called that one a failure, right, bud? I called it a failure. I drew two lines in the form of an X, the universal symbol for no bueno. It was 1 bar away from the high, meaning, Jim, if the signal was here, it wouldn't have hit my stop, and we'd all be saying how wonderful it is. I'm pointing out that it was 1 bar off of the high. Does it make you feel better if I take it off like that and we say no good? We're still in the 60 to 70% range if I do. If I sell the signal, the crossover at 555, it's a $14 move down, positive $14. If I sell at 745, signal with trend, it goes down 13.25 points. If I sell at 945, the bad signal, I lose $14, which I acknowledge, and I put here, minus 14, no bueno. The candle closes above, and then, Jim, look, crosses below the moving average again. Crossover trade. Where do I hold it to? The next buy signal, $23.75 move. Jim, at 11:30, I have a signal with trend, and I exit at the 12:40 candle. Fred, that's an additional $7.50. I missed a signal here. Crossed over the moving average. White, crossover variation of the trend signal, and that gives me an additional $5. The candle closes below the moving average. My stop goes 1 tick above the crossover candle. I exit by 2 o'clock. Puncture trade through the white line, stop above the puncture candle. I lose money by the end of that trade, $4. Signal with trend at 240. The close of that candle is my entry. I'm now exiting by 305. I don't trade past 3 o'clock, but if I did, it punctures the white line. It comes back up and hits my stop right here. If that was the case, I lose $5.50. And then Fred, from the close of the 425 candle to right now when I'm talking to you, is $17.25. 1, 2, 3, 4, 5, 6, 7, 8 winners, 1, 2, 3 losers, with times that we've been waiting for 2 days. All times have always ever been, will always ever be, and are Eastern time, because that's my computer. Times are local to your computer's PC. So Fred, we have a problem. Big problem. 14 plus 13 plus 23 plus 7 plus 5 plus 3.5 plus 15 plus 17 minus 6 minus 4 minus 14 is a net total of $73.50 times $50 per dollar per contract. Losses at the bottom, winners at the top. $3,600. 8 out of 11 winners. On the largest index, the largest futures instrument, the most liquid futures market there is. What about the crazy ones? Well, we can look at the NASDAQ. A lot of you are Nasaholics like me. In the morning, if you follow the same rules, Take a screenshot of this if you want to go back and study the video later. Signals with trend and punctures. Net $95 in the morning session. How many dollars per dollar on the NQ? Anybody? Do the math. 95 times $20 is $1,900 per contract if you're trading a large contract, $190 per contract if you trade the micro. What about the afternoon? Did it work in the afternoon? $61 more. So $95 in the morning, $61 in the afternoon. That's kind of bananas. So Fred, how are we making more money than we're losing on the most volatile market using 1, 2-day-old times? And again, you've had these times and directions since Tuesday night. I know why. Because Grandpa cheats when he plays Monopoly. And Jamie Dimon never goes to jail. And you trade like Monopoly is being played fairly. And it's not. There's nothing fair about it. Aren't you tired of getting ripped off? Aren't you sick of seeing your stops hit right before it goes to your target? Aren't you exhausted watching for signals all day with 95 indicators? And you're pretty sure the person who sold you the system is lying? They've obfuscated how everything works. It's proprietary. It's black box. You're pretty sure that trophy wife picture of his is photoshopped and he's not trading from a laptop in West Palm Beach? Aren't you tired? There's a variation of my software. There's a plugin for it on the website. It's called Aurora. It's called Aurora. And I did something for you guys before I got here today. I asked the computer to test all of the settings for me. I asked the computer, Fred, to go back and keep track of the signals in the direction of the trend with a particular formula that I put together. And I ran it. And I said, let me try something really interesting. And in this case, I want you to see, I'll show you the exact parameter on the indicator. Fred, when I went to test the software for you, I want you to see that I looked at a very narrow window of time. One 15-minute section. When I ran the plugin and I said, how profitable is the S&P between 9:30 and 9:45 using my signals? 15 minutes a day. 15 minutes can save you $500 on your car insurance. I asked the computer, hey, when you run the test, what does the output look like? So now here, I want you to see something. The first signal is 9/17/2021. With the Aurora plugin, I can test my parameters, my settings, and see what's the best combination. The first setup was a year ago, 9/42. When I come all the way through on my 3-minute chart, my last setup was the 15th today at 9:36. And it was a 16-point winner, 16-tick winner. This is a year's worth of signals trading 15 minutes a day with one contract. And when I add those values up together, Jim, that chart shouldn't look anything like it looks, should it? I can go with you signal by signal because my signals never repaint, disappear, reappear. They're carved in stone. Predictive signals can't change. Once they're in the space of existence, that's it. I have customers that will watch to see if I change the signals once I post them to the website. I have somebody who makes sure the log of updates to the web page is documented so that I can show people when the images were taken and when they were posted. That's how ironclad we are about our transparency. After 1 year of signals on the ES for 15 minutes a day, that's nearly 700 ticks. It's $12.50 a tick. No slippage and commission in here, but follow me. Oh, 700 times $12.50 is $8,750. Let's take 80% of that. Let's take 85% of that for slippage and commissions. That's $7,437 after 1 year, 15 minutes a day. 1 or 2 trade setups a day. How is this possible? I know Jacob's been showing you his trade setups. Some of you trading trades are taking trades based on Jacob's setup. And I've seen your emails to him. I've seen your Skypes. It's changed your life. You're profitable for the first time and you're giddy. This is 1 or 2 trades a day. What if you added 1 contract every time you increased your account size $5,000? Could you qualify for a prop firm with a setup like this? The signal works. Here you'll see on my chart. Look, Fred, crossover trade. Puncture. Signal with trend. Crossover trade. It's bananas. All of this is bananas. Any questions about anything I've shown you here today? Any questions about anything I've shown you here today? I wanted you to see for yourself. This, by the way, works on stocks. If you trade stocks and options, here's a chart with Apple. You can see the times coming up in the future are waiting for us on the right-hand side. Friday, September 16th, Monday, October 3rd, Thursday, October 13th. I works on a daily chart here for the ES. I'm expecting this move to go down and double bottom with a stop run here tomorrow. If it punctures through the white line, I know we're going to continue down until October 14th. Joe, if you want more info about Aurora, you can check out the link on the product page of our website. There are 2 extensive demonstration videos there that go through all the aspects of it. You can use this on forex. You can use it on crypto, as I mentioned with Ethereum today. If you took a signal with trend, the largest move of the day was a short from here to here, a $99 move. But you got to believe it. Fred, I'll say it a second time because I speak fast and I get a little excited. And it's worth mentioning because I know you've been burnt. In 13 years, not one of our signals on my children's life have ever repainted, disappeared, reappeared, appeared after they were supposed to. So I'm going to ask you a question. Fred, how can I make those signals repaint if they're in the future? How could I make that and that and that and that and that repaint if 3,500 people in that group were watching them today? I can't. Why is honesty so important? Why do we go to such great lengths to try to prove this? Because all of us here have been screwed by everyone else that's selling a magic bullet. And every one of us have bought a tool that did the exact thing I swore to you ours doesn't. And pretty soon you realize you're left standing there with a dead fish. Fred, this is a picture of me next to my mom, the woman who grew up with my piece of garbage grandfather. And that's an Eagle Scout medal right there. I'm not perfect and I make mistakes, but I know the difference between right and wrong. On my honor, I will do my best to do my duty to God and my country, to help other people at all times, to obey the Scout law, to keep myself physically straight, morally awake, and mentally straight. I'm trying to be as honest with you as I know how to be. And there's no way to be more transparent than what I've just shown you. And I've eradicated any possibility of what I've told you being not true. This is the world we live in. These are the rules. And I learned 15 years ago, together with my trading partner, who's now my best friend, hey, this stuff doesn't work. What's really going on under the hood? Trading isn't about looking at what happened in the past. When you're watching a signal in the past, vendors can get away with things like repainting and disappearing and reappearing and appearing later. They can get away with it. They can change the settings and you never know until it's too late. Well, it's a free trial, Bill. Why don't you just come in and hang out with us for a little while? And the next thing you know, you drop 25 grand and you're sitting in a room with 5 other people in Springfield regretting your decision. It was a free trial. How did I end up here? Holy marketing funnel, Batman. Trading is about the future. What will the market do 5 minutes, 5 hours, 5 days from now? Jamie Dimon doesn't care what your stochastic did. Warren Buffett doesn't care that your MACD is extremely oversold. They don't care. Elon Musk, right before his tweets, watched the signals on the Tesla charts. Somebody knew something. Guess what? Raytheon and Northrop Grumman just got $1 billion contract to make exploding drones. Wow, there was a buy signal last week on that chart. Did somebody know? This is the world we live in. This is the world that you trade in. I've taken times and directions from Tuesday night. We've walked on the water with them together, scooped down, put the water in a glass and turned it into wine. one trade a day, 15 minutes a day for a year. How are you doing? Do you want to do better? Do you want to play the way everyone else is playing? I love this picture. I love this picture. This picture epitomizes how I feel. Every day that I wake up and I turn on the TV and I read about this guy or that guy and that president or this president, I'm pretty sure that no one gives a rat's patootie about me down here in the bleachers. And everyone else on both sides is getting away with murder. And all of them are getting contributions from lobbyists linked to people whose wealth is inexhaustible because they print the money. Do a quick study and see how many Goldman Sachs people were head of the Federal Reserve. How many JP Morgan associates work with people in the Federal Reserve? And how many dollars in fines they pay. Fun fact, JP Morgan pays $1 in fines for every $3 profit. That's pretty good. Pretty good gig if you can get it. That's like stealing 3 TVs from Walmart, Fred. And the security card makes you give back 1 every time you leave. Hey, where are you going there, Joe? I'm just going to steal these 3 TVs. Not on my watch. Put one of them down. Okay. Am I in trouble? No. Can I come back? Yes. Whew, it's a good gig. The numbers are out there. You can do the math yourself. I learned pretty quickly, and my dad taught me this. He said, Michael, it's not what you know, it's who you know. Were you ever taught that? Did you ever learn it for yourself when you got passed up for a promotion? Some guy in the neighborhood, something happened. This is what most of you that don't have the software are doing every day with your MACD and your super indicator and your gurus. The market must go in my direction because I say so. And he just looks down at you. This is what our customers do. When the car in front of them goes around the corner, they get behind the car. When the car in front of them goes down the straightaway, they get behind the car, and the car pulls them, drafts them into profit. When Goldman trades, we trade. When they short, we short. When they go long, we go long. And over a year's worth of signals, we saw examples of the signals today. Over $3,000 in one day, or one trade a day. These numbers shouldn't exist unless this is true. That's all I'm saying. That's all I'm saying. Now, how do you get it? How do you get it is a very simple thing. So $3,800, whatever, hypothetical, 700 ticks over a year, 15 minutes a day, hypothetical. The program we're talking about is called Tachyon Warp. It is our flagship product. 98% of people, when they start with us, they start right here. The program I showed you earlier called Aurora is a monthly subscription if you wish to get the signals on your chart, have the ability to test them, optimize your parameters. That's a plugin for Warp. But Aurora is a plugin for the main program here. When you click on the Learn More button, I'm going to paste a copy of the link into your GoToWebinar chat box, the lockbox. And we'll come here. Let's just tell you how to get this before I answer any questions, Mark. Well, Mark, this computer is 6 years old, and it was designed to play video games. A lot of times there's an issue from a prior indicator on your computer. You can email Ron or Rachel, and they'll get you squared away. I have 2 workspaces open and close to 20 charts right now. And I'm running GoToWebinar, which is eating about half of my resources. At the bottom of that page is a link, and I can run that on a Chromebook. I run Warp on a Chromebook with the same workspace. You'll see that the software costs $2,495. If you click the Buy Now button, you'll see that there's a pop-up. It's for a trading room that one of our customers runs, a guy like Jacob, who's been doing the Thursday webinars for me, a profitable trader. His name's Colin. Colin's from the UK, and he demonstrates setups in the market using this software 3 times a week, Tuesday, Wednesday, Thursday, from 8 to 12 Eastern time, New York time, the New York Open, forgive me. If you're a hands-on observer who likes being told, here we go, here it comes, in here, out here, that option is available for you as a customer. You can bundle that with your purchase for $149 a month. If you don't want it, don't get it. Nobody will care. But it's there if you want it. If you don't want it, go to the checkout without the Pro Training Room. This is the purchase agreement. You can read through it when you get there. We basically promise to make sure the program works. If you enter the promo code WARPOFF. Yeah, Mark, just email Rachel, RACHEL, at backtothefuturetrading.com. She can get you in. Or you can go into the website when you log in with your username and password, and you'll see the Pro Room there to subscribe when you log into the Customer Resource Center of the website with your existing username and password. If you put the word warp off and hit apply, it takes $500. Yes, Joe, it does. It takes $500 off the price. So there's a promo code available for you if you want to get started. It reduces the price from $24.95 to $19.95 with promo code WARPOFF. WARPOFF. Warp off. No spaces, lowercase. This is going to include free installation. It's going to include 2 computer licenses. It includes free lifetime updates. You have video archive training, basic to advanced video shorts for you to go through and walk through tutorials, as well as our undying gratitude from a company that has a 4.9 out of 5.0 Trust Pilot rating. And again, we've been in business for 13 years. So all of that is included with your purchase. Warp off $19.95. Today I showed you 15 minutes a day for a year, well over $19.95. 1 day's worth of signals was over $3,000. And then the NQ in the morning was nearly $2,000. And then in the afternoon was about $1,000. Any questions about the offering? What's involved, what's included, and what you get? Fantastic. Fantastic. So there's something for everyone at our site. If you're looking for a basic entry exit system, you're using Warp as a confirmation tool. I have a good system. I want to know if the time lines up with my volume signal, if the time lines up with my order flow analysis signal, if the time lines up with my pullback to support or resistance or my fib numbers. Yes, Fred, you can trade. Most of our customers are trading the indices, either a forex or a cryptocurrency at the same time with a longer term position in a stock or an options trade. No limitation on the markets you can analyze and use like other companies do to you. We're free thinkers here, right to repair people. If you're happy, we're happy. You tell your friends, they tell their friends, and it's a Calgon commercial after a while. So Warp is where everyone starts. If you want to add the plugin to it afterwards and have it kind of show you semi-automatically in here, out here, puncture, crossover, signal with trend, optimize it, refine your settings, optimize the times of day you want to look for it, check for a fixed target and stop level or an ATR based target and stop level. Aurora is a great laboratory for that. And those of you that have been waiting for our fully automated solution, that's going to be available here in the next little bit here. We've got our first beta version coming in for testing from the programmers here at Mount Olympus. And so stay tuned for real. It's almost here. Fred, if you want to trade with Aurora, it works out to about $300 a month or less than $100 a week or 2 ES points or less a week. So that's something you could add on. I would suggest you wait, get Warp under your belt, and a lot of people do just fine without it. And they use Warp as a standalone tool. But I wanted you guys to see that we've been working on something for everybody. Meaning, as you get comfortable with the tool, your investment doesn't get lessened. You can increase it and add things. Like a Tesla with auto driving, that sort of works. You can build off of your original purchase. There's always more you can do with it. And we just want to be honest about that. If you're in that Parthenon of people that just wants to use it by itself, use it by itself. Watch the video today. I showed you how to use it. If you want to get more refined, some of you are like accountants. You want to test every little thing, use the Aurora signals. If a lot of you are emotional basket cases and I just wanted to trade for me, it's coming. It's coming. We're going to have something for everybody here. But you got to start with Warp. No way around it. I want to be part of your team. We want to put our combined 30 years of experience together for you and make sure when you go out on the track tomorrow, when you put your contract down, that you've got a reason, a tested reason, tested by customers, tested by optimized strategies, tested in each webinar we give out every week. Full transparency. We told you what might happen. We told you what we do when we got there and measured what happened when we did. No one else does it because they can't. We believe the only way to win this game, and for some of you, this is a big crisis. The only way to win at trading is to trade the way the cheaters trade. That's it. Otherwise, you're walking into a casino every day, convinced you'll be the guy who hits it big. And that's not the way this world works. This world, you stand behind the wizard, you look at which buttons he's pushing and you push those buttons. You look at which knobs he's turning and you turn those knobs. You look at which strings he's pulling and you pull those strings. You win battles by knowing the enemy's behavior patterns. When JP gets ready to buy tomorrow, my customers will be there. Maybe it works, maybe it doesn't. If it doesn't work, they lost a little bit. If it does, they made a lot. You do that over and over and over again, and now you've got something. Now you've got something. I want to thank you for your time. Again, I am the owner and the founder, co-owner and founder. I do this with my best friend every day. He's amazing. You'll get to know him when you join our family. If anyone has any questions, you've been getting notes and stuff from our associate here, David. David at backtothefuturetrading.com is going to be following up with some of you. Please answer the phone if he calls you. He's a really great guy. I love him to death. No nonsense, brass tacks. He's just going to let you know what your options and resources are. No hard sell, used car salesman tactics here. I promise you, we don't do that. We're different. We try to be. May the wind be at your back. May the sun shine upon your handsome and beautiful faces here today. May the valleys rise up to meet you. The mountains of adversity and all of your troubles lay low before you on your journey. I wish you peace. I wish you prosperity. I wish you fellowship, adventures, and memories and long lives. If we can be a part of what you're trying to do in your life. If you don't believe in coincidences, we don't, and you're here today, this may be an opportunity for you to be part of something wonderful. I hope so. I hope it is. And if you're ready, we're ready to help you. Thanks again, everyone. It's been really great coming back here. Send some positive energy Jake's way. And if he's not ready to come back next week, he'll probably be for sure the week after that. I appreciate all of you that are existing customers. Get a chance, check out our Aurora page. A lot of exciting things happening here, and we're trying to keep you informed as we go. Thanks again, David, and everyone here at Back to the Future Trading. We love and appreciate all of you. Have a great night, guys. Bye-bye.